Welcome to the Raise and Exit podcast, sponsored by Avasta. This is the show for entrepreneurs that are looking to figure out how to raise their next round or exit the business successfully. This is all about going and learning the things in advance that you need just at that right moment. We talk to industry leaders, people who've gone through this process before. They're founders who've started funds, they're private equity folks, they're venture capitalists, they're people that are going through the journey. All of this is to go and help you learn from everybody else and get the wisdom of the crowds to succeed at your raise and exit. And to start things off today, we have Ari Goldberg, who is joining us to be able to provide an experience which I think is going to be hard for people to go and replicate. And the reason why is Ari's not the conventional person in the world. In fact, I think what I actually have to start with, Ari, where in the earth are you today?
I'm actually in quite a standard place for me. I'm in New York City, which is a rarity, but I'm here for the moment.
Oh my gosh, that's only because you have so many airports to choose from to go and find your other place on earth to go to. Does that sound right?
Yes, sir. Very active.
Awesome. Awesome. Well, I would love for you to kind of give like just a bit of an background as to your entrepreneurial journey. And what I'd like for you to just start with is what made you realize that you're an entrepreneur? I know you started from a very early age, but specifically, like, do you have a moment that you remember where you just said like, "Oh my gosh, I'm better to do it alone rather than the like the stereotypical environment that's there."
Yeah. Well, if it's cool with you, I'm happy to give kind of like the standard background,
Please, I love it.
and segue into that last question, which is definitely a good one and a fun one. But as many know, I went to NYU undergrad and for grad school, undergrad in economics and politics. I have a master's in hospitality and sports business from NYU as well. I started my first business when I was 19. Did a lot of celebrity marketing promotions, mostly with Noah Tepperberg and Jason Strauss during the early Tao Group days. When I graduated, I went to go head up biz dev for Steve Stout and Jay Z at their marketing firm Translation. I left there to launch a couple startups. Then I was brought on by Maverick Carter and Rich Paul to launch LeBron's marketing firm, LRMR, that became Spring Hill and Clutch. Within a week, Mav took me to meet Dan Gilbert from Quicken Loans and the Cavs. Dan became the lead investor in a couple businesses I was starting at the time. Flash forward a few years, I was a founding partner of a video mobile app that we sold to Yahoo, co-founder of a big data company we sold to AOL, and founder and CEO of a large digital media business in the fashion, beauty, lifestyle space that we sold to Penske Media Corp. Then I went and traveled the world for a few years, started working some passion projects that would lead me to where I am now. Somewhere along the way, I had an idea in the consumer medical space, went out to LA, acquired a business, raised some fresh capital, rebranded it, opened up retail in New York and LA, sold most of that business to focus on R&MKR. So I have an alternative investment firm. We're a specialized private equity shop. I really focus on businesses that leverage our expertise, which is in digital media marketing. So our business model looks like that of an investment firm. We're looking at businesses that we either take stakes in and own, or that we start from scratch and have ownership in. But our team looks like that of a media company: content, branding, social, PR, influencers, marketing, etc. So we're very excited about all the things that we have going on, which I'm sure we'll get into. Um, Getting to your initial question, which is a very good initial question. So I come from a family of small business owners. I have to remind people that the word founder, entrepreneur, these are like new Silicon Valley terms. When I was growing up in the 80s in Cleveland, Ohio, my parents just owned their own business. They were small business owners just like their parents. Um, so I think it's a little bit, nature versus nurture. So it was a bit nature for me, for sure. At a young age, I remember like playing Monopoly with my dad. My bar mitzvah theme was Monopoly. I remember knowing all the presidents on every dollar bill and every coin, when I was three. I think at a young age, and candidly, something that I feel like over the years I need to get back to is the game of money, right? Not so
Mhm.
much the business of money, but more the game of money, which is an important concept. But to your question, I think early on, I probably my dad loved to tell the story that I fired my first employee when I was 7. I told the cleaning lady that her service, I'm sorry, the nanny, that her services would no longer be needed. She called my dad at work and she was like, your son just fired me. He's like, I guess you're fired. Listen to that. That's definitely a family favorite. But later in life, I think probably around college, as I had started my first business, I kind of realized I always tell people affectionately that I'm just completely unemployable. I'm a maniac. I like to do things my way, and I like to lead a team. And for better or worse, I'm willing to take on that risk to have that sort of autonomy. And I was very privileged to start my career heading up biz dev for Steve Stout and Jay Z at their marketing firm. And just after a little while of being there, as great of an opportunity as it was, I just realized that like I wasn't cut out to work for someone else, and
Yeah.
I was ready to take the risk and go see what the role was all about.
I love that. I love what you went and said there about unemployable. Last year, I wrote a piece where at encouragement of others, around how I discovered that I was unemployable, and I actually went and put together a question list on like how you can go and figure that out as well. So I could put that link at the bottom of the podcast for folks that are interested in it. But I just love what you went and said in terms of that kind of like that sense of self, that restlessness that you're pointing to. Now, I'm going to go out on a limb and go and say that rnmkr.co stands for rainmaker.co,
Yes.
and I love that play on words. If you kind of go and take a look at it, who benefits the most from what you're doing at Rainmaker?
Uh,
Because that I think is something for you to say. Like you talked about the services that you provide,
yeah.
and I think it's different from who benefits the most. What's the mindset of your ideal customer?
That's a very astute question, and it's something that we, again, we're an investment firm, but we're marketers, right?
Yeah,
So we're actually constantly asking ourselves the same question because, in marketing speak, what we're constantly thinking about is, when we put an offer out in market, whether it's for the firm or what for one of our portfolio companies, we're breaking down that question that you're asking, which is who is the target audience? What do they need? What do they want? What are their fears? You're kind of working through that marketing strategy, and I think the first thing for us is based on the offer, we call it audience, but we're really looking at like the constituency. So depending on the offers of RNMKR, we have different constituencies. So the first one is, what we'll be releasing soon, our RNMKR partnership, really this idea of what we call people of influence, like-minded investors, founders, influencers across the world, really giving them a platform to connect, to share, to do deals together. So that's the audience there.
yeah,
When we look at our portfolio companies, our investments, obviously that's who we're trying to empower. The teams that work with us, and more importantly, obviously the audiences that those businesses serve. And then last but not least, with an upcoming platform, our multi-manager platform, when we actually partner with other funds, we're actually looking at how we can leverage our core infrastructure and assets of brand and digital media marketing and operating partners to actually help other fund managers make their funds more attractive and robust. So, good question, and I think very much depends on the audience and the offer.
yeah. I love what you say there because coming at it from a marketing or brand point of view, I think it's very different from a lot of other funds that come at it from a very financial metrics point of view. And this is a theme that I run into with a lot of companies that we work with, all the way from early stage, all the way to like some of the largest in the world. And that is the friction between what I call traditional metrics that people can relate to because we've been using them for so long, and the metrics that you actually need to use to be able to make a better decision. But the key thing is to be able to translate back and forth. What's a metric that you've developed in your career, or maybe you're using at Rainmaker that you can share that gives you, call it better alpha, a better sense of where the market is going or where the opportunity is than maybe a traditional one like GP margin or cost of acquired customers, etc.?
It's a great question, and for us, it's an easy answer. The first slide in our deck says revenue is the only metric that matters. So, being around so many investors, starting so many businesses, especially around the early stage investors, which they don't care about things like profitability and stuff like that. You get caught up in all CAC and CPMs, CPAs and CPCs and all these sorts of things. At the end of the day, the business is either generating the revenue you want it to or it's not, right? And then obviously, most importantly, you got to keep your costs under control, and that's where you get your profit from. But really, like a good business is delivering good products and services that its customers like, and they come back to buy it, and that's a function of revenue generation. And as long as you can do that while having your costs under control, you're going to have a nice business. You might not have Uber, but then again, Uber didn't make money for quite a long time either. So I think kind of tangentially, one of the things that I always caution founders, especially, and even fund managers, when I'm advising them and they're asking me questions, first thing I always ask is like, what do you want? Right? It's one of my favorite lines that I tell everybody, to a point of annoyance is the scene from Alice in Wonderland where she's like, "Well, which way should I go?" And he's, "Well, where do you want to go?" She goes, "I
Yeah.
don't really care where." And he goes, "Well, then it doesn't matter which way you go." And so like that sort of thinking, because especially for early stage founders or people that are entrepreneurs, especially for their first time or second time, what do you want out of this? Do you want to build the next Instagram? That's you got to go this way, right? Do you want to build a cash flow business where you can belong to a country club and control your own destiny? You got to go this way, right? Do you want something in between, or do you want to start a charity? What is it? And if you don't know what you want, then someone else will tell you,
Yeah.
right? So you really got to decide that. And I think especially for your audience, just as you're starting any endeavor, and you could even be a little bit into it, but like you got to take a step back and say, what do I want? Because it's your ass on the line, it's your credit, it's your upside, it's your risk, it's all those things that you got to determine for yourself. And if you're not happy, what's the point?
Yeah, I love what you're going and saying there around that sense of like, why are you going and doing this? A lot of the things that we run into with speaking with some of our companies that retain our expertise is around like they look at like that big transaction that happened in the industry. Like your use of Instagram is perfect, right? It's like, wait, an app sold for $1 billion? Like, what the hell? Like, oh, I must be able to go and do that as well. And there's some great insights from Greg Eisenberg recently where he went and said, "It's like, look, you got to go and find like where you are in the right moment at the right time. Like you can't be building apps 15 years after apps became the big thing. You got to go and figure out what the newest thing is in the marketplace." But there's another element that you talked to that I'd love for you to just unpack a little bit more, and that is that expectation of yourself in that first business? Because you've done this multiple times. So I'm assuming that you've picked up a certain wisdom with respect to yourself. But if you go back and take a look at what is that Ari Goldberg first time entrepreneur, that Ari Goldberg multiple time entrepreneur could convey back as wisdom that might have changed things for the better and not necessarily more successful, but maybe better from a mental health point of view or managing oneself. What's that wisdom you'd go and give to that first time founder and managing expectations and their excitement of what they're building?
That is a really, really good question. And for me in particular, I think to your point, and so many of your audience and the people that you work with, it's a similar thing. I think it's probably an entrepreneurial trait. But the first thing is you got to want to get better, right? Like you have to have the
Mm.
desire for self improvement, or else going back and doing a post mortem is irrelevant, right?
Yeah, yeah.
And so as I look at like my bookcase, it's like, 60% business books, like 30% self-improvement books, and like, 10% books about guys that can dunk and stuff. But
That, that's the LeBron connection right there.
yeah, yeah, yeah. I was thinking about that. But yeah, I've always been kind of fascinated by the concept, right? And it's like the analogy a lot of times I'll use, especially as we're starting businesses or launching new investments, is like it's like someone brought us the most beautiful piece of marble, of Italian marble, right? And we're chipping away and we're chipping away. And a lot of times we'll get to the phase where like I can tell it's a man.
Yeah.
It doesn't look like David yet, but I can see that it's a guy. You know what I mean? And we're kind of there, and you got to keep chipping and refining. And I think, for me, especially after we sold Stylecaster and I kind of went on my own journey, and the ups and downs of having your first big business, and being on the cover of the New York Times, and speaking at all these engagements and doing the dance, and having a nervous breakdown, like all the literally the roller coaster that we sign up
So
for.
you touched upon it right there, right? It is that the overwhelm of success or the overwhelm of the next expectation, right? Like if you're going through like I've experienced like a nervous breakdown or a breakdown of myself of self, right? Like tell me a little bit more about that aspect, Ari. Like how would you in hindsight know that shit, I'm about to kind of cross that threshold and I can't keep my composure?
Very good question. I think the leading question to that, I just want to touch on what you asked initially and follow up with that was, if I could go back, my first business, I'm doing
Yeah.
celebrity events, marketing promotions. I'm in every cool New York City nightclub as a 19-year-old at NYU. Um, my advice to that young hustler that was like a bull in a china shop, right? This guy couldn't move fast enough. He was so excited to be in New York, and he was trying to take advantage of every opportunity possible, was play the long game, right? Just in the relationships, in the business, in the learning, focus on where we want to be 10, 20, 30, 50 years from now, as opposed to where we want to be, 20 minutes a day, a week from now.
Yeah.
I think that would have really helped me with a lot of my relationships because I was always so we got to go now, which is good, which is good. You got to move with that urgency. Or as Dan Gilbert, my first big investor, would always say, urgency is the ante to play. But I think to your point, when you do start to have some success and you do start to have some challenges, right? And the bigger your business gets, the more successful your career gets, the highs get higher, the lows get lower. And it's part of, I think, what makes the entrepreneurial backbone.
Yeah.
A lot of us are just crazy. I think there's a great quote. Forget the guy's name, who says the difference between insanity and genius is measured only by success. Right. So we're all crazy, right? If you're really successful, they call you a genius.
So
Um,
bang on that part, Ari. I love how you're putting
I
that.
love
You
that
know, yeah,
one.
that's a great one. And your Michelangelo David one as well from before, right? Like I just chipped away everything that wasn't David,
Yeah.
right?
Yeah, you gotta let them out,
Yeah.
and I think, when I sold Stylecaster and I went to LA and I walked around on the beach for months on end in board shorts and those shoes and shit, I started to see business a lot more, I think, like Steve Jobs. It was much more art to me, whereas growing up, it was much more science,
Yeah.
right? I'm not like a spreadsheet guy, but it was like this, we gotta do this, I gotta yell at people, and then I gotta do this, and I gotta be in the press, and then it was this artistic feel of like, I create, I build. This is an artistic endeavor as much as it's a monetary endeavor. And I think to your question about, you know, like the line from Wall Street where he says, man looks into the abyss and he finds his character, and that's what keeps him out of the abyss, right?
Yeah.
And I think as entrepreneurs and founders, we're always on the edge of the abyss, or at least we should be, right? You should always, I always think in one liners. So it's like the Mario Andretti quote, where he's like, if everything feels under control, you're not driving fast enough.
Yeah.
So I wake up on a Wednesday and I'm like, today's going to be a great day. I feel normal. My next thought is, well, something's wrong. You know what I mean? Like, I'm definitely not doing enough. If everything feels normal today, what a waste of time. Like, let's go crush something and create some problems. So I think that is a learned experience for all of us. We all have to kind of figure out, like in the Goggins perspective of like your own governor,
Yeah.
right? Like, where can you take it to? When is it your mind playing tricks on you? When do you really need to take a time out? Mark McCormick speaks in his book, one of my favorites, What They Still Don't Teach You at Harvard Business School, about the idea of, every week you should take a day off. Every month you should take a weekend off. Every quarter you should take a week off. Every year you should take, a month off. And just kind of like baking in that rest, because as you mentioned earlier, someone like LeBron, my friend Human, would always say, like, you have to look at yourself as a corporate athlete, right? And so, like, LeBron is not in game 7 NBA finals mode 365 days a year. His whole schedule is optimized to be in game 7 NBA finals mode one night a year, right?
That's a great way of putting it. And what you think you're pointing to is almost what I would call the entrepreneurial sabbatical. I think we have like this notion from the academic domain, right? Hey, every 7 years, take a year off, go and, do research or go to another university and then come back. But I think you have the same thing from the entrepreneurial point of view. I think you can get trapped in your own creation and almost being obsessed with it without being able to step back from it and have that perspective.
Yeah.
So I love kind of how you just kind of alluded to it. Now I'm going to go and pull one on you here, Ari, and I'm going to go and put you into a lightning round.
Okay. All right. As long as
You
you don't
ready?
call the ex-girlfriends, we should be fine.
No, no, we weren't going to that one. All right, coffee or tea?
Yerba mate tea.
Okay. All right, sunrise or sunset?
Oh, fuck, that's good. My dad loves sunsets.
Amazing. Okay, a book that changed your life?
How to Win Friends and Influence People by Dale Carnegie.
Amazing. One habit that you take to set yourself up for success in the future?
Discipline.
Say more about that.
Um, I like that when Bob Proctor says, discipline is the ability to give yourself a command and follow it. Um,
Ooh,
and if you
love it.
can master that, you're unstoppable. And as long as then you just have to figure out what you want to do. But discipline to me is always the thing.
Got it. A question that you would invite every first-time founder to ask themselves regularly.
What do I want out of this?
And a question for when you're ready to sign on the dotted line to sell your company. What would you want to be asking then that everybody should ask?
How quick can we get this done?
That is amazing, Ari. I'd like to leave you with two more things. One, what type of a company or founder should approach you to work with you at Rainmaker? And then we'll move on to how people can best get in touch with you. I think you alluded to it with Instagram before, but I'd love to get an answer to the first one.
Yeah, for us, we have everyone calls themselves a contrarian these days. I think we are pretty contrarian, or at least we see the world with a unique perspective. My fascination is lower middle market profitable businesses. So businesses doing, say, sub 10 million in revenue, that have been operating profitably and have good operators for the last few years that suck at marketing. So if you're a business that is doing 5 million in revenue and 2 million in EBITDA for the last 3 years. You got a good operating team and you don't have a website, call me now. Because those are the things that I get excited about.
Amazing. And best way to get a hold of you?
Best way you can get me on Instagram, get me on LinkedIn. All my socials are at Ari S. Goldberg, ARISGOLDBERG. I'm pretty good on there. So get me on social and I'll get back to you ASAP.
Amazing. Ari, there's so many more questions that I would have wanted to ask you today, and I might just tease you with sending a follow-up and almost going and having an asynchronous Q&A in the coming days and weeks. On that note, I would like to just thank you on behalf of the audience to have you share your wisdom and really give those nuggets that are there from when you were that 7-year-old, that 19-year-old, and then now we will not tell you how old. Thank you, sir.
Thanks a
Have a
lot.
great one.
Edgar, thanks for the time, man. This was great.
Fantastic.
Good luck.
Cheers.
Bye.
Reflecting on the podcast that we had with Ari, I was just realizing how important it is for you to be very clear on what you're trying to achieve with your business. Are you trying to build a billion-dollar company? Are you just really passionate about solving a problem and seeing where it goes and takes you? Are you vibe coding? Like, what really has you get here? And I think that part of what makes you who you are as the founder, as the entrepreneur, whoever it may be, and what you're going and building out is so critical. Figure out your end game. Not that it has to be exactly that, but just be conscious of it. Be aware of what you're growing into. So on that note, I hope you got some value out of this for yourselves today. Till next time.